Hello and welcome to ATFX's US CPI preview. My name is Nick Twidale. I'm the Chief Market Analyst, and we're going to take you through what's one of the most important data releases, not only of this week, but probably of this month, especially with regard to Fed rate cut expectations. Now, first up, Fed rate cut expectations have been pulled right back over the last month or so. This month's meeting is now 99.9% priced in to stay on hold. And July's meeting is only priced in for a 14% chance of a cut, whereas that pushes out in September to about 54%. So that's kind of where the pricing is now looking for on the next Fed rate cut in this cycle. Now, of course, CPI data, very, very important inflation numbers. And we've got two sets coming out. We've got the usual headline month on month. That's expected to show a 0.2% increase. And we've got the core month on month data, which is expected to show a 0.3% increase. Now, the interesting thing about this week's data is it should be one of the first chances that analysts get to have a look at what's the impact on inflation from President Trump's April Liberation Day tariff announcements. Expected to add inflation to the market. If it does start to creep up there, we're going to see those rate cut expectations move further down the curve and disappoint investors in a big way. So once again, that key one, the month on month, that's the headline one. But really, the Fed's probably going to be looking a little bit closer at the core. That takes out those highly volatile energy and food numbers, and that's what they're looking at for their underlying number. Now, the headline year-on-year CPI number expected to show a 2.5% increase, obviously way above where the Fed would like to see it down near 2. And that core number is expected to show a 2.9% increase. Anything higher than any of these numbers could really push those expectations out. Obviously, the other side of things is true. If we see a dip in these numbers, expect rate cut expectations to come in as the Fed tries to assist the US economy, and we could start to see some big moves, especially in certain products. And we're going to look at a few of the key ones that should see big moves. We'll look at gold, we're going to look at euro, and we're going to look at dollar yen. I'll take us over to the first one of our charts. We're going to go and look at gold first. Here's our longer term gold chart. As you can see, we're still very much in the uptrend, and that's been helped a lot by those aforementioned tariffs from President Trump, all the way back from when he came into play around about November. We've seen haven buys pushing gold to the higher. There's that all-time high. We're sitting somewhat below it at about 3,300. The high was just above 3,500. But if we get a weaker print from any of these numbers, expect gold to fill in this gap very quickly. Next resistance level about 3,391. And the recent high about just above 3,400. So expect to move to try and challenge that. Conversely, of course, if we get these higher numbers, that there is a fear in the market that we could get, ties in with what we got from the jobs numbers. Dollar gets bought and we see gold start to fill in this move back down here. Initial support coming in 3,203. And then we're probably looking at May low that was about 3,120. So good trading opportunities from the middle of the range in gold. Expect some slippage as you try and get into these positions if those numbers are far from expectation. But these are longer term charts, so you're probably going to get a bit of an opportunity to trade them. I'm going to move over to the euro now. And here's the longer term euro chart. The euro's sitting poised nicely for a break to the top side or a pullback into the range. Don't expect to see too much from the euro and probably gold and dollar yen in the next couple of sessions unless we get a geopolitical update. But euro nicely poised. Weaker numbers will push up to these recent highs that we've got, the annual high around 115.72 and resistance trend line coming in around about 115.50. A challenge there could come fairly soon if we get a lower print. And by these lower prints, I'm looking at that core number, expecting plus 0.3. It comes in around 0.1 or 0. Then that's I think is going to really move markets. And you know, the same the other side. If we get a 0.5, a 0.6, expect euro to dip as dollar buying coming through. Initial support coming in at 108.17, and then we're looking all the way down to that annual low. All the way around about 143. So big moves could come on the back of it. Obviously, it won't happen instantly, but there is a good trading opportunity if you're moving very quickly on the back of this data. Once again, of course, we have to caveat. If it comes in on expectations, just expect a little bit of squaring up on some positions, maybe some smaller moves, and then we'll look at the next data, which will be PPI the next day after. Over to dollar yen. Obviously, we've been seeing a lot more volatility in dollar yen, and this is where it could get interesting, because at one point we were looking at Fed rate cuts, and that's all the way down from here, plus BOJ rate hikes. But we've seen a nice move back down. As you can see, dollar yen approaching those resistance levels around about 146 at the moment. Stronger numbers. So on that core number, if we're getting a 0.4, 0.5, 0.6, expect that to be challenged and maybe break, and we see a move over the medium term up to that 149.50, 150 strike level. Conversely, of course, lower numbers pulls in those rate cut expectations, and we see us drop back down again. Initial support will come here. There's been a few lows just around here, around about that 142, and then we've got the longer term trend line support around about 140, 106, and then that low that we've seen on the year, there you go, 139.86. So fantastic trading opportunities coming up in all of these products and some of the other majors as well. So that's where we're sitting at. It is a big event this week as well. There's not too much else out on the macroeconomic calendar. We will get some influence if we hear updates on trade news between the US and China, and that could move markets considerably. But from a fundamental perspective, this CPI number could be big, and we could see some really big moves on the back of it. So thanks very much for listening. As always, contact us if you need anything. Thank you.